Hey guys, welcome back to the Greenback Voyagers podcast. I'm your host, Shravan.
And I'm your co-host, Joel.
And this week, even though it is our second podcast, it's basically been an insane week this week. I will call it the week of insanity. That's probably what I'll call this episode. Because, I mean, where to start off? GameStop and AMC were just nuts this week, weren't they?
Yeah, I mean, it went up like all the way to 500. I mean, that was crazy. I didn't
pre-market like that. 538.
Yeah, wow.
And then it dropped to like 120 that same day as well, which
yeah.
It's like, what?
Yeah, I mean...
Yep. We got to talk about Robinhood, I think, first, before we even just talk about the short squeeze in itself.
Yeah, I mean, Robinhood, what else? It was like Webull and TD Ameritrade. They all stopped trading for those stocks. I mean, I went on Robinhood and I looked it up, and you can't buy like more than 5 shares of AMC, and like you can't buy more than like I think 5 of Nokia, and like so many stocks were, they stopped trading or put limits on them. Yeah,
it was insane. I mean, I maybe can understand TD's perspective in the fact that when I tried to open my app to close some positions I had that morning, I literally could not make an order for like the first 10 minutes. And I was just like shook there like, oh shit, if the market crashes, I am literally going to be in the red for the day.
Yeah.
But Robinhood, on the other hand, Robinhood's a bit insane because they only allowed the traders to sell, that basically brought upon the insane drop from 500 to 100.
Yeah. Yeah, I mean, it was intentional, right? Obviously.
Yeah.
But
I mean, my thing is, I don't want to be a conspiracy theorist, but Melvin Capital is one of the main hedge funds, as you know, that lost a lot of their
almost $2 billion,
profits.
Right?
Yeah, something like that. And they had to get bailed out. But the interesting thing is, they got bailed out by Citadel. And Citadel, for you guys that don't know, are a pretty big source of revenue for Robinhood. And basically, Robinhood just gives them data based off the trades that the investors on their platform make. And Citadel will purchase them and all. So I'm like kind of worried that Citadel kind of forced Robinhood into this, and maybe what might have happened is that Robinhood needed the cash because Citadel started pulling out their investment or wasn't buying anything from Robinhood, which caused like revenue. I don't know, but
yeah, Robinhood had some problems this week. They also had to raise about $1 billion from existing investors too. But yeah, going back to Citadel, I mean, I wouldn't be surprised if they had a hand in what went down this week with limiting trading and having an only sell option. So I mean, it is what it is right now. I think when you have billionaires losing money, they can always put in all their resources and connections and try to block these platforms.
Yeah, I mean, right now it looks like an all-out war between those, I guess, millionaires and billionaires versus us individual investors now.
Everyone's in a war mood. I mean, you go on WallStreetBets, the Discord, or the Reddit. Everyone's just like, hold the line. This isn't over. Just buy, and I mean, it's all stemming from like decades old. I know big guys manipulating the markets and getting rich off their tactics, and they don't have any regulation, right? Or they don't get regulated as much. But now CNBC gets like the head of NASDAQ on, and he's saying that we need to regulate the markets now. So I mean, yeah, it's all hypocrisy, and yeah, that's why a lot of people are riled up, and
yeah, it's actually insane. And seeing I think AOC and Ted Cruz actually agree on something.
Yeah, I saw that tweet.
Ever. I mean, Wow. Okay. Never would have expected that in all my years.
Yeah, it's gotten so this is like such a big thing for the financial markets. I mean, now like if a hedge fund wants to go short in a position, they're gonna have to think twice, and they're gonna have to come with a whole new risk management type strategy. So because
Oh yeah, I wouldn't be surprised if like Reddit just finds random stocks that are being
yeah.
like heavily shorted. Like there's some car parts, I forgot exactly what the ticker symbol was, that has an insane
Hertz?
amount of
No, that's
it's not Hertz. No, it's some like random car parts. I forgot about it. Maybe I can send it to you later, but like their short volume has like increased from like 2 million to like 18 million
Jeez.
within a space of 5 months.
Okay.
And it popped like one day from like $12 to $20. And I'm pretty sure like millions of people got caught out by that. So what I'm worried about now is all these like low float stocks that are being shorted heavily are just going to start rising, as we saw this week with a couple of them.
Yeah, I mean it's all once they get grouped up, they all deploy their capital. That all that accumulates into a huge force, and a lot of people are starting to realize that because I think like because it's all from COVID as well. I mean, after COVID, everyone's just forced to stay at home, and people are bored, and so they're going to okay, I'm going to start trading. I'm going to do this and that, and and I'm pretty sure like most of them, especially our age guys, they'll go to Robinhood first, and communities like Reddit, they'll start forming groups, and it gets bigger, and people will start posting profits, and they'll follow each other, and if some guy goes like, okay, GameStop is a buy here, and he posts his like DD and everything, and people are just gonna jump on it, and that's just how it all started. So yeah, I wouldn't be surprised.
Yeah, but I don't think
if some other.
I don't think I've seen it to this. Yeah, I don't think I've seen it to this magnitude though. That's the thing.
Yeah, this is unprecedented.
Yeah.
Yeah, so I mean,
but yeah, I think you're right about the regulations though. Like they have the circuit breakers and all if the market falls 7% or something,
right?
So that the market specialists themselves can readjust their shares and make sure that it doesn't fall anymore.
Right.
But then like, what happens when a stock just rises 10-15% in a day? Like, it's crazy enough to think a stock falling 10% in a day, but just rising 10% in a day isn't that bad as well. Like, do we need this much volatility?
Maybe not like a single. I mean, if a single like Apple goes up 10% a day or 15%, I think that's fine. But when this is a whole tricky situation. So how do you regulate Discord and the groups there, and how do you regulate like Reddit, that community there? So I mean, I don't think anyone has a solution for this right now.
No, it'll be tough.
Yeah, so it's a very tricky situation. We'll have to see what the SEC and everyone says. But I mean, I don't even know how to, like, if I was working in the SEC or like in the government regulating these things, I don't know what I would do. Like, how would you can't go and ban Reddit, you can't go ban the Discord, like that would just add more fuel to the fire. So they have to come up with something here.
Yeah, but they got to implement it on everyone. But it is a hard task for them to do. Yeah. But it's something that they should have done before any of this happened.
So you also said there was another stock, GBR, that ran up.
Oh yes, yeah. So GBR is a renewable energy company that had no news based on it, and ran up like, I think it was 900% by the end of the day.
Wow.
And no one knew about it because everyone was so focused on GME, AMC, COS, Nokia, that no one, I doubt anyone knew the stock was running. And it's just insane because I'm just like, how is it that a stock can just run up 900% without anything happening? Like, I don't think this stock was even shorted that well. I don't think anyone even knew the stock existed. So, I mean, it's just things like this happening. And then Dogecoin. The meme cryptocurrency.
On Friday was like up 600, or was it Thursday? It was Thursday.
I don't even know. Yeah. It was overnight. It was overnight something.
Thursday. It was up like 600% in like one day.
Yeah.
Yeah, a lot of people
And then
piled
Friday
into
morning it crashed.
Yeah, it
Yeah.
actually went down. I think it's like at 3 cents right now. So
Oh
yeah, it
man.
fell down. But you know,
But yeah, it's insane, fam. Just how volatile the market is right now.
mm-hmm.
I think it happens always in history. The investors are going to lose out because we don't have the information that the hedge funds or the investment banks have, which is really key in order to understand where the market will go in the next couple days even.
Yeah, I mean, it's gonna be like at the end of the day, I think it's gonna be, you know, small retail traders and investors that will lose out, who jump in at the wrong time.
Yeah.
Because you know, when even in like Wall Street Bets, I'm pretty sure like maybe like the top you know, investors with, you know, a couple $1 million, maybe like 10 $15 million, the really, you know, the top, or not maybe big investors, but the big retail investors there, who jumped on GameStop early. They're the ones, you know, who made a lot of money. And then, you know, you have your small traders who buy in like 5 shares of GameStop or at $300, or like 10 shares, or buys an option with like 50% of his principal. You know, they're the ones who are probably going to lose out. And yeah, it's tricky times right now. We'll have to see.
Yeah, they got to find some way to regulate that. I don't know. Maybe they should have some test or something before you can even open an account,
dude.
like so that you understand it.
I absolutely. When you know, when I opened my Robinhood account, it took like the first time I opened it, I think they gave me options approval within weeks. And
yeah, that's insane.
yeah, that to give exposure to a new trader to things like options, where like it's a pretty complicated, you know, way of trading, right? There's a lot of things,
Yeah.
like you have to learn the Greeks, and you have to look at like the flow, and it's so volatile. There's always premium kills, so they give you access to that so fast. And when I moved to Fidelity, they still haven't given me access. So, you know, they need to, those are the first things that need to be regulated first, and maybe stopped, and add more restrictions. And not only options, like they also give you access to margin. And, you know, a lot of small traders get margin calls in like these such high amounts. So they need to stop that for sure.
Yeah, I mean, I've never been a big fan of Robinhood. I mean, okay, one of the reasons is because one of the founders, I think, went to TJ, but that's my biased opinion on it. But the other main reason is just the amount of controversies that have come out of Robinhood over the past however many years they've been in inception. And this is just the latest one out of them all. I mean, you're just, they wanted to, I mean, it's called Robinhood, for Pete's sake. Like, from the Robinhood story, how are you doing this? You can't be doing this. It goes against everything that they created their product out of, which, I mean, I'm glad I never traded on Robinhood. I'm also pretty glad that, like, most traders, when they just go in, they have no idea what it is, and they just try and buy. Right. I guess we are both one of the lucky few individuals who are young and kind of understand the risks of the world. Maybe it's because we're so close to the capital and we kind of know what's going on within the governmental world and the politics world. But we know the risks, and we researched the heck out of everything that we knew about the financial market, the options market, right, futures, the commodities market, before even making our first ever trade.
Right.
And even then we made mistakes.
Yeah, I mean, in high school we had the investment group, right? And we did that simulated trading, right? And so I guess we had researched, and we've tried with like paper money and things like that before we turned 18 and, you know, started with real money. But, you know, a lot of people now, like a lot of young people, 18, I don't think they even do like simulated trading. They just jump in with, you know, $500 or $1,000 and they tried to gamble. So so I think like they need to start moving towards long-term investing, and
but it's hard for them.
Yeah, everyone wants to make a quick buck, right? So
Yeah.
And that just becomes addictive
I mean,
over time.
yeah. To all those people who did make money off GameStop and AMC, like, congrats for you.
Mm-hmm. Yeah.
Like, we want the hedge funds to lose, even though we might have to work in them at some point. But yeah, just big congrats. But to everyone else out there, just like, be careful, I guess. Don't rush into any decision without understanding different perspectives and how you can lose out potentially.
Right. Yeah. Well,
But
always
I guess,
invest in what you know. That's all. Don't just jump in because some guy on Reddit says it's going to go up, or 10 people on Reddit are talking about it. Just invest in what you know. That's as simple as that.
Yeah. But, I guess that's enough about this whole frantic week. We have other stuff to look at, mainly, the legit stuff that we were meant to be covering. First, we have, the figures that came out this week, the metrics. We have the U.S. economy, the UK economy, as well as the government debt that all came out this week, and the jobless claims, of course. I think the jobless claims were pretty low this week compared to previous weeks. I hope that's a good thing, but it's still stabilizing around that 800,000 to 1 million range. So it may be some time before that really shifts up another gear and we get more people flowing and consumers spending even more.
Right. Well, yeah, going back to, GDP, UK is having a very, very hard time right now. They have the lowest, I think they had the worst quarter out of all the G7 nations. And they also have the new strain, which is taking on, it's ramping through. So, yeah, UK is having a very, very hard time right now. I think.
Especially with the Brexit deal.
Yeah, that also. Yeah,
right?
That's one of the main reasons I think for their GDP to shrink. But COVID is also adding more pressure, and yeah, and I think they're going back to like lockdowns that they had last year. So, yeah, it's getting very, very tough there.
Yeah,
I'm not that worried about
didn't do
US.
that bad.
Yeah, it did shrink, but the fourth quarter it recovered very fast, and we probably will recover this year and continue to grow.
Yeah, I think while Trump did a pretty shit job with how he handled COVID,
right?
Boris Johnson looks like he did a hell of a lot worse.
We're kind of, I wouldn't blame kind of Boris on it, but it's also because geographically they're in the center, right? If you want to travel to, let's say, like India, if you either take a Dubai, or you either stop at Dubai or Abu Dhabi, or you stop at UK or like Frankfurt, right? So that Europe is also like a center of the world, right? So they got hit a lot harder than we did, and they also got the strain. So let's just hope that the UK government knows what it's doing and they'll handle this.
Yeah.
Yeah. Also.
Yeah, and I guess.
Go ahead.
Oh no, you go ahead.
No, I was gonna talk about some of the tech earnings that we had this week.
Oh, okay. I guess I wanted to know your thoughts on whether the Fed should keep, I guess, investing into the economy. It's the best way of putting that.
Just buying up corporate debt, and that's it.
Yeah, just keeping on with whatever they're doing. I feel like they should stop, because, I mean, look, I know tech is a big portion of the market right now, and tech has had a really good year the past year. Well, I don't think it's enough to justify that the S&P 500 is up over 30% where it was pre-pandemic levels.
Yeah.
And so it's like, should the Fed just keep pouring money in? I agree with the interest rates being low, but should they just keep pouring money in? Like, I don't know.
I think instead of pouring money into corporations, we need to have an effective way of giving money to the people, right? When you look at so if you look at FDR and like Reagan's his kind of policy was to give money to corporations, do big tax cuts, and that will kind of trickle down to the people, and they'll get the small benefits, right? But FDR's approach was you give the money to the people, and they will deploy it into the economy. So that is the type of strategy we needed to do during COVID, and I guess we failed, right? we ended up giving billions, and I'm pretty sure like more than $1 trillion to big corporations. And yeah, I mean, you see big banks giving out bonuses for their CEOs, and so they're enjoying it, right? They're enjoying our our taxes. So yeah, yeah, it's, I mean, you can't, this is how it works here. So yeah, but yeah, going back to tech, Apple, Microsoft had a great quarter. I mean, Azure grew so much. Apple, Tesla, Facebook, they also reported on Wednesday. They had great earnings. I mean, blowout iPhone sales. Facebook, great growth. Tesla, they're profitable this year, but they tanked. I was so surprised. I mean, they tanked the next 2 days.
I wasn't surprised with Tesla's tank. I was surprised
Apple tanked. I was so surprised.
Yeah, I was surprised Apple tanked.
Yeah, but I think I think if next week, if tech's down, if Apple goes like 15% down from pre-earnings price, I think it might be a good buy for long term. It's buying the dip for this.
Yeah, I mean, it could be. Tesla, I don't know. Tesla, it's hard to determine with Tesla what their future goals are and what their, cash flow statements are going to be like, because, I mean, they get a lot of, credit from the government in terms of, because they're all about like EVs and all that type of shit. But how much can Tesla like grow within the next couple of years? How long is it going to take for them to reach their targets that they've planned?
I think Tesla probably has to first bring the cost of their cars down in the U.S. markets, in the Chinese markets, and also they just got into the Indian markets, right? They're gonna start building a gigafactory there, so the cost of the car needs to go down. Where if we're in our 30s and we're gonna buy a car, we should consider buying a Tesla car, even though it's maybe like a few $1,000s more than what like a normal car would be in our price range. And also they need to start, you hear the saying like Tesla's not a car company, it's an energy company. So you need to see how are they going to go into solar. They have Solar City, right? Elon Musk runs Solar City. What are they going to do with that? And also there's also Hyperloop prospects. So what are they going to be an infrastructure company, or are they going to have tubes that run under highways to get rid of traffic? So there's so much potential in the company, but I think that's all priced into the stock. I mean, at a nearly $800 billion valuation stock, the PE ratio is over 1,600. I mean, it's just, as much as you like Elon Musk and Tesla, the stock price is just so unjustified. I don't think you can justify the stock price.
Yeah, that's my main concern, is that the main reason for the stock price being so high is that they just hope that Tesla can keep surprising them. But right. Tesla really hasn't surprised us with earnings in the past. So my thing is, why do investors believe that they should surprise us now? Yeah. But hey, I guess EV market is EV market. But going off Tesla, actually, they brought like a new car lineup up, or just a new model up, right?
They refreshed all their models, so the Model S, the Model X, they're all refreshed. I don't think Model 3 was refreshed, just the Model S and Model X. So new interior, few changes on the bumper, some design changes. I think they got rid of the chrome and went for like black trim. I think the range is also increased. And they're doing a lot of changes in the interior, and maybe some of the autopilot, that from what I've heard.
Yeah, I think you were, I don't know if it's a rumor or not, but you were telling me yesterday that Tesla was like, there was no drive shaft system on Tesla.
There's no like what's it called? There's no gear selector. Usually you have like
reverse and drive and neutral and all those settings.
Yeah, you would switch it between the gears, from park to drive to neutral and reverse. Or you have like a knob, like on Mercedes, or like, some of the cars that have like a rotating knob. But Tesla, I think they're going softer with it, which is surprising to me. They don't.
I don't know how they're gonna do it, fam.
It's concept art. Maybe like regulation could block them from doing it. So, but yeah, that's what Elon said. So they're going completely software, which, I mean, I guess software is great. You can update the cars. You can do all these things, but to a certain point, you can't just go completely software. You got to have some analog features, right?
Yeah.
So
I mean, I think they can go full autonomous. The thing is, with what they were saying is like, it knows whether you want to go in reverse or drive. But what if there's situations where, like, you want to go in reverse or you need to go and drive, but like the car doesn't know that itself? Like, it has to be fully autonomous so that there is no driver error involved.
He's envisioning a future where you walk to the car, the door opens for you, you sit in, the door closes automatically, and you just watch that display, you watch Netflix or you watch the news, and the car just takes you to work or takes you wherever you want. That's what he's envisioning, and that I don't know how far that is into the future, but I mean, I feel like it's gonna be here within 5-10 years.
It may be.
He's probably testing.
I think it'll be a
certain
bit
things
longer.
out.
Yeah. I think the main issue though is I don't think Tesla will rule the world in terms of like the sales that they do with their cars, because there are people that enjoy driving. I enjoy driving. I sometimes just do a small road trip, an hour road trip with my friends, and we'll just go places, chat, and then drive back because we just like it. Right. We like doing that. And with Tesla, I mean, there are certain people who just hate driving, so it'll be perfect for them. And there are some people who shouldn't be driving, and it'll be perfect for them as well. But like for the rest of us, I don't think it's like Tesla's going to take over the world like most people are saying.
Yeah. Well, what about did you hear about Biden saying that government vehicles are going to go all electric?
Yeah, so Workhorse looks like a good opportunity there because they were in talks with the USPS, I think.
Yep, United States Postal Service.
Yeah, and that backed out, but hopefully with I guess this promise that Biden has put out, Workhorse can possibly provide some of the services for the government.
And
but I'm surprised GM isn't there.
GM it has a goal. They laid out a goal saying that by 2035, in about 15 years, they'll go all electric. So they'll be like Tesla, all electric cars.
No, I was just surprised that Biden didn't hint at anything towards GM.
I don't think he can say it, right?
And that is true. Yeah. But like, at least in terms of investors and all, it was kind of odd to see Workhorse just shoot up. I thought it'd be GM because American company. They're the only ones who can have the capability to deliver all those cars. Right. With that shifting timeline, so.
Yeah. Well, Workhorse already has like the momentum behind it. A lot of traders bought in, so it's kind of known for being for the USPS contract, right? So when Biden says like the government vehicles will shift to electric, people are first going to think, okay, U.S. Postal Services, that's probably going to be the first thing delivering mail. So I think that's why Workhorse probably went up.
Yeah, but I mean, we'll see where GM goes with it. They've made a drastic shift within a year's timeline.
God-awful logo.
Oh gosh, don't even. That logo, it honestly just, I swear, it looks like they just put the GM, like the letters G and M into Word and used word art, and just instead of capitalization, they just made it lower, which just made it worse.
Yeah.
I don't know how people are like so ecstatic over it, but like,
I don't like
they
it.
Probably spent like how many ever $1 million on that piece of garbage logo. They could have hired me. I could have done like an easily better job, and I'm not even an art major. I'm a fucking finance major. Like,
well, let's go to China. Jack Ma is alive. He was.
Oh yeah.
He appeared out of hibernation.
Was that this week?
It was a few weeks ago. But speaking of it, Jack Ma, why I brought him up? His Ant Group IPO that failed. So he's planning to turn it into a financial holding company, and that's going to be overseen by China's central bank. So the CPP is going to be controlling. That's why the Ant Group IPO failed, right? Because CPP wanted to, or no, not CPP, CCP wanted to regulate those big companies and how big Alibaba has grown into. So they just want more control.
Yeah, and especially with China, with them overtaking the U.S. as I think the world's top destination for FDI, foreign direct investment. Yes. It's changing times here in the economy.
Yeah, a lot of money's flowing into China, in Chinese businesses right now. Like Wuhan, the city where first COVID originated, it's back to normal. Like people are partying in bars and everyone's like acting like everyone's no masks and everyone's just back to normal. That's surprising.
Can I get some of that then?
Like the city where COVID first originated is completely back to normal. Yeah, so looks like China is it's on its way. I mean, if we trust the data and the pictures coming from the government, China is in a great spot right now.
But yeah, I think that does it in terms of what's happened this past week, which is quite a lot. Mm-hmm. But yeah, I think it's time we went over and looked at our stock picks for the week.
Yeah, I don't have any, trades for next week. I'll have to look at them later. But I think for a good long-term buy, Salesforce is a great long-term buy here.
Yeah, especially with their acquisition
of Work.
Whenever that's going to come with Slack. Yeah, with Slack. They're always a great buy. Mm-hmm. And where they're at right now, they've been in that range at 210 to 220 for so long.
Right.
They can really just poise up and close that gap that they had.
Right.
Up to 250.
Yeah, so they closed the earnings gap. And a lot. I think there's a lot of shares accumulating right now. So we're waiting for a breakout. It might be next earnings, most likely. So it'll probably consolidate around the 2025 and maybe 2050 range, go up and down there. But yeah, I think it's a great buy. I mean, for the next 5 years. And also not only Salesforce, a lot of the RPA, robotic process automation stocks. So popular companies are like UiPath, that's going IPO pretty soon. There are certain RPA stocks that are out there, RPA companies, and those stocks could have a huge potential this decade. RPA is basically software that takes over smaller jobs. So you can automate a few someone picking up the phone, answering like a secretary job. Certain things you can automate that. Small browsing and doing data analytics, automating all that, you can automate that too with RPA software. So there's so much potential for RPA software here, and I'm eyeing UiPath for its IPOing next month. But there's certain companies out there right now, smaller ones, that I think ABB is one of them, that they're trading around $30. So that's good.
I'll be honest, I don't have much picks as well. I think right now the market is at a crucial level. Where it hit the lows this past Friday, I think around 370. Mm-hmm. If it dips below that and starts to break down, I see the 364, 365 range as good support. It's hit that a couple times, I think, in December. Mm-hmm. But yeah, anything below that, and it's going to be a rough February then.
Yeah, I mean, historically, February does drop. The markets do drop. And we're not going to get, or at least, Democratic controlled government has not given a clear pathway to stimulus checks. Even the 1,400, the ones that they said they will pass out, those are being delayed right now. So no money coming.
I mean, are we surprised?
I'm not surprised.
Yeah, I'm not surprised as well. It's exactly what happened in 2009, and it's exactly what's going to happen now.
Yeah. I think a lot of people in Georgia are pissed at the senators because they thought that the senators were going to push for 2,000 new checks added on top of the 600 checks. So they'll get 2.6 thousand. But It turns out that it was a total of 2,000, and they're gonna get 1,400 checks. And a lot of people in Georgia did not know about that, so they're mad at their senators. And on top of that, those $1,400 checks are being delayed to March. So yeah, I don't know what the Democratic they can't blame Mitch McConnell. They can't blame Trump. They have to blame each other, and we'll have to see how that goes.
Yeah, I think we've both been saying this for a while, that Democrats they won't do much even if they take majority. And they'll pass the laws that they really wanted to in the first place. And I don't know, they don't really seem to care much about the citizens as they say they do. Otherwise, we should have seen some major reforms both in the Obama administration and, I guess early on in the past 2 weeks within Congress. But yeah, I guess that does it for us this week.
Yes.
So yeah, thanks everyone for listening in. This is episode 2, the frantic week within the stock market. Hopefully we don't have another one like this, but make sure to follow us on Spotify. We will be dropping uploads on YouTube and creating a Twitter account shortly. But yeah, until then, we shall see you next week.
All right. Thank you guys for listening. Stay safe.